Good morning, traders. It is Tuesday, July 1st. Taking a look at the charts, equities are trading lower this morning. Money seems to be rotating out of stocks a little bit, down about 0.5%. It is moving into the more defensive areas. We're seeing bonds up 0.25%, and we're seeing gold and silver really pop. Gold's up 1.7% this morning, which is a nice pop for gold. Again, working its way up this 50-day moving average in this big consolidation, very similar to a consolidation over here, where I think uncertainty will continue to keep gold holding its value or moving higher. We're also seeing silver up 1.5%, percentage-wise for silver, nothing too significant, but overall it has built a series of bull flags. We have a rally, bull flag, rally, bull flag. It is pointing to higher pricing for both gold and silver. If we take a look at miners this morning, they are trading sharply higher in pre-market as well. We've got the GDX trading up at just over $53 a share. So again, it's similar. It's pulled back. It's finding a bounce and a bid and working its way higher. I think we could see all of these want to hold up and move higher as the uncertainty in the markets continue to unfold. Now, I have touched on the comparison charts of 2007, 2008 market top, and then where we are now. Originally, I thought we were more so kind of in this phase right here where we had a big breakdown on the S&P 500. Both of these were 20% pullbacks, and then the market went into a dead cat bounce before rolling over and selling off a whole lot more in 2008. But we have seen the market roll over. We had a bounce and it's turned into a rally, which is what we are long the markets. When we look at our strategy, you can see how we got into this oversold bounce and then it kicked into a rally. We've been long this rally. We've hit a few targets. It's continuing to push higher, both the QQQ and the S&P 500. And when we look at the this chart, if we go back to this previous high, you can see they're very similar type of price action or the market. This is a weekly charts of the S&P 500. And you can see how gold's been moving up and how the equities markets moved up. And we came up and we hit this new all-time high. The market pierced into a new all-time high. And gold continued to push higher. And we're doing something very similar from this standpoint. We've hit new all-time highs. The market is pushing up here on the weekly chart. Gold is also near all-time highs and on the verge of breaking out and rallying. And of course, we just need to see if this is a fake out or a real breakout. And that's the question. You can see what happened last time. The market put in a top, started to sell off, and then it went into this bigger correction, which I thought we were more so over here. But as the stock market, as we take a look here, as the stock market sells off, after hitting some nominal new highs, which just means a small higher high, gets the shorts out, it gets anybody who's not long the markets, it gives them FOMO, a big dose of it. They get long the markets and then the market sells off. During that time, gold broke higher and continues to run. So we could see something like that. If the stock market does reverse and get rejected, gold could have that defensive play and shoot higher while the stock market has that next leg, that leg back down. And then eventually when selling hits the market, we tend to see gold and the stock market sell off together. So that's the potential scenario that we're in now as things have evolved and changed. Again, analysis changes almost daily, weekly, monthly as things unfold. We can't just pick one strategy or one idea and stick with it. We do have to change and evolve with the market conditions. And of course, we went from what looked to be a bounce to go lower, turned into a rally. And of course, we've been taking advantage of that up about, where are we at with this position? We are currently up about 13% or so on this NASDAQ position, allowed us to avoid the chaos and be able to buy back into the market at almost 5.5% lower price and catch some of this upside. So it's not about calling these moves and nailing it and saying, hey, I called that. It's about, trying to do that, but understanding that when the market front turns from a bounce to a rally, you do need to take part of it. Even if I'm bearish, I do want the markets to crash and reset, but we have to do what the charts say, not what we want and what we hope is going to happen. We just have to follow the money. So let's take a look at the rest of the markets real quick. We do have equities are down, gold and bonds are up. We have the dollar down again, continuing to unwind. Of course, as the dollar falls, that is going to naturally help gold move higher in US dollar terms. If we take a look over at crude, it's up 1% this morning. It does have what looks to be a very high momentum bearish type of pattern, meaning we have a very strong move down. We have a very tight little, you could call it a pennant or a bear flag. It is pointing to lower pricing just based on this pattern here. It is pointing to roughly, I mean, it's a nasty drop if this was to unfold, $52 per barrel, which isn't far off where we've been talking for a long time. I've been expecting $45 to $55 per barrel, which we really did come down to 55 already, really not that long ago. But again, this is a long-term trend. I think we could see this unfold and continue to watch oil break down and sell off. Where it's stuck right now, if we were to just zoom way back in time here, we'll just go to here. If we just zoom in at this price range, we're at that $50, $65, $66 level. This whole area here is a pretty major pivot zone. Either you're naturally stuck above it or you're naturally stuck below it. And more or less, we're right back at it. Now, you could, I know some people are saying, hey, we broke through it. We're now sitting on support. And that could be the case. But just keep in mind, this here is a news-driven move. Straight up, straight down is purely on headline news and risks. And something that goes straight up on news and straight back down, you kind of have to just toss it the waste bin and not look at it as kind of a new trend starting. This is kind of just noise. And the reality is prices come up. It's stuck, to me, it's stuck at resistance and has a bearish pattern based on this momentum to the downside. And we could see oil have a precipitous fall. But again, if war stuff picks up even more, this could easily pop back up. Again, I'd avoid oil. It's something that moves and has news around it all the time right now. Carries a ton of risk. We don't need to throw ourselves in and walk through a landmine when there's all kinds of other ways to grow our money in a conservative or a more protective way without waking up to being on the wrong side of something and being, man, that was a waste of time and money. So let's take a look over at the hot list. Overall, we've got the ARK ETFs consolidating. We got blockchain is holding up here. If we take a look, it's been extending. It had this bull flag pattern. It's extending and moving up. I'm wondering if the blockchain is going to work kind of like what miners do. If miners start to outperform and rally, then we see gold and silver rally. If we take a look at Bitcoin, where is the IBIT? I don't know why I struggle to see it here. Here we go. IBIT, if we take a look at the Bitcoin price chart, it is trading lower in pre-market this morning, down around the bottom of this range right here. But it does have this tight little bull flag. So it's going to be interesting to see if we start to see Bitcoin pop and push higher. It does have this very large bull flag pattern pointing to, $135,000 per Bitcoin, which I don't know what that is on the upside here, but there's a lot of potential upside if Bitcoin can get some traction from there. Other than that, that's about it for today. We'll just let the markets unfold. And that is it. Talk to you soon. Bye-bye.